Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. All right, everybody. In today's episode, we're going to talk about Procter & Gamble. Its role as a dividend aristocrat, what exactly is a dividend aristocrat, and how it's benefiting from the coronavirus. And we'll also talk about my passive income portfolio. So, as you guys know, we're in like week 4 here of the US kind of being in lockdown from the coronavirus. And there looks like there's some hope of the economy reopening soon. We're at towards the end of April. There might be some states that are opening up businesses again. But one business that's been profiting overall, or one corporation, is Procter & Gamble. So Procter & Gamble makes a lot of home essentials, right? Products that we use kind of every day. And they do this and they sell this around the world. And so they have been benefiting from the coronavirus. So I've had Procter & Gamble in my portfolio since the beginning, really, since I started this passive income dividend growth investment strategy. And, obviously I didn't know the coronavirus was coming, but they're just an overall great dividend growth company. And so let's talk about why I included them in my portfolio to begin with. So we're going to jump over to this Wikipedia article, and I'll put the links for all of the articles that I show below in the comment area below. But a dividend aristocrat is basically a company that's on the S&P 500 that has paid out and increased their dividend payouts for 25 consecutive years or more. So that's, if you think about that, that's a really long time, right? These have to be well-established companies. They have to have had a dividend, and they have to have raised it every year for 25 years or more. And so it's a limited company. There's actually an index for it. And there are ETFs that kind of track the same companies. And so Procter & Gamble is one of those companies. So I'll scroll down here so you guys can see the list. It's actually fairly long. It's longer than I thought it would be. But Procter & Gamble is one of those companies highlighted here. So again, like I said, they make consumer staples or household products. And I've always had them as a part of my portfolio. They just are a really solid company, mostly for the reasons that they make products that people will use every single day, right? They have really good brand advantage as well. So if you look at some of the brands in P&G, they make Tide, right? The biggest laundry detergent company in the U.S. They also make Bounty paper towels, again, the largest paper towel company in the U.S. Downy, they make shampoos, they make a bit of everything that we just use. And so it's one of those companies where they're going to be around for a long time, assuming they aren't screwing up their financials or they aren't highly leveraged or something like that. So some of the articles this week around Procter & Gamble have focused on their earnings. So their earnings came out this week on the 17th, April 17th. But before that, they actually raised their dividend, right? So this article from Seeking Alpha came out on April 14th, where Procter & Gamble actually raised their dividend 6% to 79 cents per share. Again, Procter & Gamble has been consistently raising that dividend. And this was funny because they raised this dividend before their earnings release, and they moved their earnings release from April 21st to April 17th. So people were expecting a lot of good news. And so their stock popped that day, and then it also went up on the earnings call. So if we look at what happened in the earnings call, this is a different article, which I'll link below, but Procter & Gamble beat expectations for revenue and earnings. Earnings was, pretty close to expectations, but Procter & Gamble's report stated that their organic sales rose 6% in their financial quarter 3 to top the consensus mark of 0.48%. Most of that was in kind of healthcare segment, and baby, feminine, family care. And what's interesting is that they talk about the 1% decrease in the grooming business. So if you jump over to this Reuters article, it talks about a little bit in depth. I'm going to scroll down to the area where they talk about the different categories. Let's see. So they were talking about, wow, they're seeing a 20% increase in consumption across categories. That's a huge amount, right? They sell their products in most grocery stores. As a lot of you are familiar with, the grocery stores have kind of been selling out of these staple goods, right? So that, you know, they're well-known brands: Bounty, Tampax, Charmin, Pampers, all rose between 6 and 8%. And then they had a dip in personal care products. So things like shampoo and makeup were down, and that mostly is due to people not leaving their homes, right? So people don't really care what they look like when they're not going to see other people. That tells us something about society, right? But those products are down overall, and not by much. So overall, really good earnings report for Procter and Gamble. They're benefiting from people kind of hoarding all of these staple goods. I think this is not this is a one-time increase, right? This coronavirus, when it goes away, you might see those sales decrease in those categories. But again, Procter and Gamble is pretty well diversified in the types of products that they make. So even though things like paper towels and toilet paper will go down, I think their categories of personal care and makeup will go back up. And so overall, just a super stable company, and it's why I choose to include them. Their growth has been really consistent, and I would recommend that folks take a look at Procter and Gamble as a company to include. Actually, all of these Dividend Aristocrats are a good starting point for if you are just starting out investing in dividend growth strategy. You should look at this list because it's a really good list of companies that have been around a while, have been increasing their dividend consistently over at least 25 years. And so I think this is, a really good starting point. I'll put a link or a notice about how to pick and choose what companies to start your portfolio with. I made a video on that earlier. You guys can view that. But again, this Dividend Aristocrat list is a really good place to start. So why don't we jump into my portfolio? So overall, we're coming back up value over time. Return overall is still down, so negative 7%, but much better than the negative 30% or so we saw kind of at the bottom here when the coronavirus fears really started affecting the market. So things have quickly taken back off. Will they last? You guys can watch my last video on that. I don't think we're back in a bull market. I think with the unemployment that we're going to see here soon, that will have an impact on the economy. And again, the Fed is kind of artificially pumping money into the economy. So when that stops, I think we'll see some reverses in the market. But overall, a good picture for my gains. So let's look at the week in particular. Week was sort of flat, right? Up 2.25%, not bad. Most of that gain is in market gain, around $270 in that. And then earned dividends was $9. So not a bad week overall. Let's look at my activity. So you can see dividend payouts here. Store capital, which it's funny, I actually have more store capital in my Robinhood account. I've just been individually buying shares of store capital as their price goes down. So I actually got a big dividend payout from store capital in my Robinhood account, which I quickly reinvested and buying more companies, individual companies. But overall, dividend payouts in my normal trading session. So not too much excitement this week in the market, at least for my holdings. If we jump over to my holdings, actually, we can sort by name, and let's scroll down to Procter and Gamble and see how much I have. So I believe this one is, cost basis of $508. Value is around $525. So overall, only up around 3.5%. But it's a company that I would highly suggest you invest in, or at least watch and understand kind of how their dividends are growing over time. This is their 1 day performance. Let's look at their 1 year performance here. As you can see, they kind of tanked on coronavirus sales. This would have been a really good point to pick up some Procter and Gamble. As you see, they're almost back up to their peak. But overall, just like a consistent growth story. It was fairly flat until the bottom of 2018, and they've really been taking off since then. So again, I encourage you guys to look at Procter and Gamble as something to add to your portfolio. Hit the like button, hit the subscribe button, really helps out the channels. I'll put links to all the articles in the comments below. What do you guys think about Procter and Gamble? Leave me a comment, and I appreciate you guys watching. See you again soon.